Dr. Donna Barris here. Welcome to another unconventional review of your assignments. This week we will be reviewing week 11 online discussion. I intentionally didn't answer it because I wanted to go through the actual numbers because math was involved. So what I do have right behind me is actually a breakout of how the answers should be. All right? So let's go over it. So, per the discussion on January 1, we had inventory at 30 units at $130 a pop. So, immediately what I do is that 30 times the 130 give you 3,900. And then on March 10th, you purchased 70 units at $140 each. So 70 times 140 give you 9,800. August 15th, you purchased another 10 units at 145, so that gives you 1450 as your cost. And on December 10th, you purchased 70 units at 150, and the total is 10,500. And this is what I recommended in the actual class discussion. I was saying that what you would do, you would sum. So all these four give you 25,650, and it's 180 units in total. So I recommend you quickly always calculate your WAC before anything else. So to get your weighted average cost, it's your 25,650 divided by the 180, and that's $142.50. Now the per the problem, it said you had 180 units left. So if you have 180 units left, that means you sold 100 units. So what I would recommend you do is get your LIFO, FIFO, and weighted average, and on where you see merchandise inventory cost, it's 80 units. It will always be 80. And how do you know you have 80? Because the problem says you have 180 units left, and then merchandise sold is 100 units, because if you have 80 units left and you purchased and had 180 units throughout the year, then 80 from the 180 give you that 100 units sold. So I like to put this quickly, let you know that you can't go wrong. You have 80 units left, so that's what you're calculating using your merchandise inventory cost. And for your merchandise sold, you sold 100 units. So now let's go into the different types of inventory management. So FIFO, which is first in, first out, we're trying to calculate what is the cost of the 80 units left. So FIFO, first in, first out. So we're trying to get to the 100 units sold. Did we sell all 30 of this? Absolutely. So you sold that 30 units at 130. See, I put a little cheat right here. Did you sell all of this 70? Yes. 70 units at 140. You see, I put it right here. So this is your 100 units that you sold using FIFO, first in, first out. So that 3,900 plus 980 give you 13,700. So what is left? You're left with, under FIFO, the 10 units at 145 and the 70 units at 150. 10 units at 145, 70 units at 150. And for your merchandise inventory cost under FIFO, you should have 11,950. Does that make sense? So for LIFO, which is last in, first out, you're going bottoms up. So I like to use your merchandise sold. We're trying to get to 100 units. Last in went out first. Did you sell all of this 70? Yes, you sold all of this 70 units at 150, because we're trying to get to 100. Did you sell all of this 10? Yes, you did. You sold 10 units at 145. Did you sell all of this 70? No, because I was at 70, 10, and how much do I need to get to 100? So I need another 20 units at 140 to get to the 100 units that I sold under LIFO. So that 70 at 150, that 10 at 145, and only a 20 at 140 give me 14,750. For the merchandise that's left over, I have 50 left over here at 140, and that 30 units at 130 to give me 10,900. And then for the weighted average cost for the WAC, it's we already have the blended cost, which we have right here, which is that 142.50. How much units we have left? 80. So 80 times the 142.50 give you 11,400. And how much we sold? 100 units times the 142 50 give you 14,250. So hopefully you guys can understand. If there's any questions or concerns,